Hey guys, welcome back to another video. It's me, Adam, and you're watching Unlimited Options Investing. In this episode, we're going to be talking about the 3 stocks that I'm looking to buy this April 2022. Now we're going to keep it real simple. Again, we're investing for the long term on this channel. Who knows what's going to happen in the next month, 3 months, 6 months. Even if these stocks go down, they're the high quality kind of names that you want to add to and accumulate, because in the next couple of years and in the long term, you'll be very happy that you did so. There definitely is risk when it comes to the market, but there's also a lot of risk if you're not invested at the same time. And yes, stocks were a heck of a lot cheaper a couple of weeks ago, right before the FOMC meeting. That's okay. It's very, very difficult to time the market. You never know what's going to happen. It's important to use the past as a precedence, but at the same time, it does not predict future gains or losses. Alright, and before we get started, if this is your first time on the channel, welcome aboard and hit that subscribe button, smash that like button, and take a look at the description for links to my Instagram, TikTok, and Twitter. Check it out. Alright, starting off with the riskiest of the 3 names, we're going to start off with Advanced Micro Devices, very well known as AMD, currently at a share price of $108.19 per share, a 52-week low of $72.50, and a 52-week high almost $100 more at $164.46. It currently owns a market cap of $106 billion. And of course, one of the favorite CEOs on Wall Street, Lisa Su, who completely turned around the company just a few years ago. Because if we take a look at the max chart, we just see a parabolic move over the last few years, with the company almost going bankrupt in 2014-2015 when the stock was trading at $2 or $3. Look at the wealth creator this one has been. And taking a look at Yahoo Finance, we have a 1-year target estimate of $151. And looking at the statistics, we're currently trading at a forward PE of 30.4, so not cheap by any measure. But as we'll see in a moment, this company is really growing at a phenomenal rate with a PEG ratio of 1.57, a price to sales of 9.22, and price to book at 26.75. And looking over for analysis, revenue estimates have the current quarter at 62.1%, the next quarter at 66.1%, the current year at 54.5%, and next year, albeit a lot lower, at 13.9%. And heading on over to the financial summary of the fiscal year 2021, AMD had record revenues at $16.4 billion, up 68% from 2020. Gross margins of 48%, up 370 basis points from the prior year. Operating cash flow at $3.5 billion, up 229% year over year. Record free cash flow of $3.2 billion, up 314% year over year. With $1 billion in strategic investments in long-term supply chain capacity. They repurchased $1.8 billion of common stock, and a strong balance sheet with $3.6 billion in cash, cash equivalents, and short-term investments. When we take a look at the quarterly summary of the fourth quarter in 2021, there's record revenue of $4.8 billion, up 49% year over year and 12% quarter over quarter. Gross margins at 50%, up 560 basis points year over year and 109 basis points quarter over quarter. Operating expenses at $1.2 billion. The quarterly profitability with an operating income of $1.2 billion and operating margin of 25%. With net income just shy of $1 billion at $974 million. With a diluted earnings per share at about 80 cents. The operating cash flow at $822 million, up 48% year over year, and free cash flow of $736 million, up 53% year over year from the prior year's quarter. AMD is a company that's trending in the right direction in all good ways. Again, highlighting those gross margins from 45%, 3 months ended December 26, 2020, to 48% 9 months later, and up to 50% a year later. And this is what we want to see when we have supply constraints, especially with semiconductors, especially when we're seeing the opposite effect when it comes to Intel. And heading on over to the candlesticks, we've been locked in an uptrend since the beginning of 2019. This being the weekly chart every time we bounced off either 20 or the 50 EMA. And whenever the stock corrected to the 50 EMA on the weekly, we always found buying pressure. And right now we've been consolidating around both moving averages. And when we take a look at the daily, we have been trading pretty much sideways ever since summer of last year, maybe July, August 2021. And what I'm going to do is draw a line right at $100, which has acted as fantastic support once, twice, and 3 times, as well as resistance at the beginning of 2021 and September of 2020. The next key area being around $125 per share, which has acted as resistance a few times, as well as September of last year. So for AMD, if you're being picky with prices, you really want to get it closer to $100. If we do break that $100 channel, you're probably going to want to average down every $10 or so. I mean, psychologically, that would make sense. But again, the lower you can get this, the better. And not to mention, the stock has been facing a lot of headwinds with fears about end-of-pandemic PC boom, leading to downgrades for AMD, HP, and Dell, and all their stocks have been getting hit. To me, this is just short-term noise. The numbers speak for themselves, and secular growth this one is going to be seeing over the upcoming years. Alright, and next up we have Amazon stock trading at $3,271 a pop, holding a market cap of just above $1.5 trillion at 1.66, a 52-week low of 2,677, and a 52-week high of $3,773 a share. On Yahoo Finance, we have a 1-year target estimate of just over $4,000 a share, which is more or less about 33% upside from where we are right now. When we head on over to the statistics, Amazon stock has never, ever traded cheap for perhaps maybe the past decade, with a forward PE of 58.14, a PEG ratio of 3.02, a price to sales of 3.71, and price to book at 12.46. But I'd like to let you know, in terms of PE ratio, when it comes to Amazon stock, this is actually one of the cheapest it has traded in years. As of the last earnings call, Amazon announced they're going to be performing a stock split, and statistically the market tends to favor stocks that do split, and not because that does anything fundamental to the company, but usually it's the companies that are fundamentally strong that are splitting their stocks. It does add positive sentiment into the stock and becomes a lot more affordable for investors. Instead of paying $3,000+ per stock, instead of paying $3,000+ per share, you'll be paying maybe $150 or so. Now when we head on over to the numbers, we see for 3 months ended December 31st, 2020 to 2021, year over year, we pretty much doubled net income from $7.2 billion to $14.3 billion. And for the full year, from $21 billion to $33 billion. So just about a 50% increase. And we are seeing a ton of investment in terms of the company. But that's always really been Amazon's MO. Instead of rewarding shareholders today, keep on investing into the company and reinvesting into the company. And maybe one day, just like Microsoft is just printing money these days, and even Google, investors are really looking into the future with Amazon. So when we look at the net product sales, we really don't see much of a difference between 2020 and 2021 for the 3 months ended December 31st. We see an increase of just below $400 million. And from the full year, we're going from $215.9 billion in 2020 to $241.7 billion in 2021. Which is about, doing math, 205.6, about a 12% increase year over year. So nothing too crazy when it comes from their product sales, but it's all about AWS and their service sales. So from 2020 to 2021, for the 3 months ended, we increased from $54 billion to 65, almost $66 billion. And for the full year, from $170 billion in 2020 to $228 billion in 2021. A 34% increase year over year. And after the earnings report came out, I read this quote, is that Amazon is actually a software company, but on the outside, when we think of Amazon, we think of ordering things online and getting packages. We see expenses have gone more expensive year over year, and this makes sense. And this makes sense because of the increased cost of goods and cost of labor, to the point where we actually see operating income decrease year over year from the 3 months ended, from almost $7 billion to about $3.5 billion. And for the 12 months ended, an increase of only $22.9 billion to $24.8 billion. We also had a huge gain from the Rivian investment of almost $12 billion, and obviously really helping the bottom line for Amazon stock. And heading on over to the charts, we bottomed just below $2,700. We're now sitting above $3,000 with a crossing of the moving averages. Now, if we do see weakness in the short term, I do expect it to see about $3,200. And this is the kind of stock that if we do see weakness, I would look around about this 3,200 level, then probably around this 3,000 area over here. And anything below 3,000, I like long-term for Amazon. And lastly, the least risky of the 3 companies, and one of my favorite stocks to hold over the long term, Google or Alphabet stock, currently trading at about $2,800 a share. And just like Amazon stock, this one is splitting 20 to 1. It holds a market cap of just below $2 trillion at 1.86, a 52-week low of just above $2,000, and a 52-week high of $3,000. Alphabet came really strong after the pandemic lows from about $1,000 to about $3,000, where it's been trading sideways for the past 6 months or so. And when we take a look at the numbers, and these are some of the cleanest numbers that you'll see in the business world. So from quarter 4 in 2020 to 2021, we grew revenues from $57 billion to about $75 billion, which is an increase of 32% year over year. And for the full year in 2020, from $182 billion to $257 billion. An increase year over year of 41% for a company that is just below $2 trillion in market cap. The operating income for the full year pretty much doubling from $41.2 billion to $78.7 billion, and operating margin from 23% to 31%. And it's hard to believe the net income in 2020 was $40.2 billion, and in 2021, $76 billion. Again, almost a 100% increase. We're seeing a bulk of revenue come from Google search, $31.9 billion in 2020 to $43.3 billion in 2021, and less so from YouTube ads and Google Network, totaling $46 billion in 2020 and $61 billion in 2021. Again, with total revenues increasing over 30% year over year. And taking a look at the operating income, so that's Google services going from $19 billion in 2020 to $25.9 billion in 2021. And although we're seeing a loss in Google Cloud, it is trending in the proper direction from $1.2 billion to $890 million. And if you got to think, probably by the end of the year, they're going to turn a profit when it comes to their cloud services. Again, Google has one of the cleanest balance sheets in the industry. Total cash just below $140 billion. Total assets just below $360 billion. And total liabilities at $107 billion. Relative to AMD and Amazon stock, Google is a lot more stable. We do get a lot of resistance around the 2850 area. We have gotten rejected before a few times, as well as in 2021. But buyers also stepping up around 2500 1, 2, 3, 4 times. We do have dynamic support around $2,700 where the moving averages are. They've just crossed, and similar to Microsoft, this is one of my favorite, most fundamentally sound companies that I own. Alright, and that is the end of my video. Thank you very much for watching. As always, let me know in the comments below, are you buying any of these 3 stocks, or do you own any of them for the long term? Let me know in the comments below. As always, subscribe, like, check out the description for TikTok, Instagram, and my Twitter, and I will see you guys in my next video.